Hi, it's Aoife Devitt, and welcome to this week's Markets Happy Hour podcast. I'm delighted to be joined here today by an INSEAD alum, friend of mine, Jens Backus. We're sitting in his beautiful apartment in Barcelona, and he has got my attention more than usual of late because he has been very active using AI models to pick stocks. So when I knew I was coming to Barcelona, I wanted to reach out to Jens to see if he could take us through some of his thinking on that, what he's learned over the course of the past year for entertainment purposes only. I think it will be interesting given that the ability of AI models to pick stocks is very much in everyone's mind. So with no further ado, let's bring up the slides. I've called this week's podcast Bots in Barcelona. We are recording it on July 8th, Wednesday. We're obviously sitting in beautiful Barcelona. And we're going to be discussing, before we get into the AI entertainment, our usual five topics: inflation, interest rates, equity markets, geopolitics, and other asset classes. Of course, in geopolitics, we haven't even got slides on it, but there has been some suggestion that the ceasefire in Iran is now all bets are off in that respect. And we have seen the oil price responding in pretty quick succession, as well as the interest rates, with the interest rates rising there in the US in the expectation of ongoing inflation. So I suppose work in progress as we speak about geopolitics here. In terms of the subtopics, inflation being in abeyance was nice while it lasted, as we'll show in some slides. Looking at some of the Fed approach to communication, we'll see why being tight-lipped matters so much to the new chairman there. We are going to look at equity markets and move into AI bots on the loose, which could be our new future when it comes to AI. And we will, of course, reflect on what this means for other portfolios. So here's Jens. He has we've been INSEAD classmates and McKinsey until 2024.
Correct, yeah.
Yeah, and then telecoms expert. And I don't think there's any topic that Jens cannot be an expert on, honestly, from politics to geopolitics to football to AI. He seems to have a very considered view on most things. So delighted to hear you weigh in not only on the AI side, but on some impressions of some of the other topics.
I should have done more research, but let's take it how it comes. Yeah.
I think doing things on the fly doesn't work for everyone, but it certainly will work in this case. So jumping into inflation. So clearly where we are with inflation is we have inflation expectations on the rise, according to the Fed. We know that the oil price has jumped just recently. When we look at the Iranian oil sales being potentially barred. And consumer expectations too are that inflation is not over. The chart on the left shows that forecasts for price rises have been among the highest since 2023. So I'd love if you could just, Jens, we're sitting here in Spain. You are in the real estate business as well, among other things, in Barcelona. What's your impression of the inflation situation here in Spain and the general economic conditions generally?
Yeah, inflation relatively moderate. Of course, like there's some things that keep getting expensive. Others are, we would say, is fairly priced internationally. Economy going well, growing 2.5% per year right now. So that's about 1% from population growth and about 1.5% from GDP per capita growth. So we're seeing a very healthy picture here, real estate going strong. And overall, we're having one of the better economies here in Europe.
And do you think that is well known? I mean, you speak with people in the international community. Often Europe gets painted with the same brush. We talk about US exceptionalism. Do you feel that the exceptionalism of Spain, perhaps, within the European narrative is making itself known?
Perhaps to some, I think certainly not in the general public. Some people know Goldman Sachs published a really great report on the drivers of the Spanish growth. Really high-end services doing very well, and tourism working very well. Immigration driving the base forward, companies investing. So there's really a lot of drivers in place. And for the last 2 years, it has grown even faster than the US itself. So that's not widely known outside of, let's say, economist circles or maybe investors. So we're having a good thing here going in Spain, and let's see how it continues.
And of course, Barcelona, the epicenter of much of that, certainly based on encouraging investment. In terms of moving to interest rates, because clearly we know that the ECB has raised rates recently. We seem to, it was not far from here in Sintra, erstwhile football clash rivals there, Portugal and Spain. But just recently, we did have suggestion that the Kevin Walsh was not going to be as transparent. There was a lot of focus on what he said. He seems to protect that, I suppose, lack of transparency as a way to preserving flexibility, not being locked into a certain policy. And certainly with the way inflation is moving today, there is a need for flexibility and agility on the part of central banks. How do you think this recent ECB rate hike, which probably was a little bit, maybe unexpected, maybe foreseen, but certainly a reversal from what we were hoping for, will filter through into particularly the Spanish economy, given you're involved in real estate?
Mm-hmm. Yeah, so we are not using debt that much. For us, it wouldn't make a huge difference, right? So for also the European interest rates are still very moderate. I mean, if you look at the historical, like ever since like the euro was launched, we are not on the high end of things these days, right? So they could go a lot higher. I mean, you will tell us all about the macroeconomics and how that's gonna come about. But for now, I think they're still very moderate, and we will see probably that they will maybe rise a little bit more, but nothing that would scare me for the Spanish economy. And for the wider European one, I mean, there's the whole sort of other issues there that you would look at first before you come to interest rates.
Of course. And just in terms of a couple of other headlines here. So AI boom is spreading, but we'll speak about that in a second. And the interesting point, this headline regarding an early test for institutional portfolios. What they mean by this is that there are, of course, so many different ways to play AI, whether it's the stocks themselves, the public equity markets, the data centers, the infrastructure, the private side, the private lending. We've known about the private lending's exposure to software in particular. So clearly some tensions there and some concerns. And another headline this week, the HSBC pulling back from riskier private credit lending. It's not the first to do that. I believe Barclays has also done that. So just little signs at the margin that this is not for everyone. And there is a lot we don't know perhaps about the risks in there. And then the fact that it is so pervasive, this AI story could, of course, create risks around concentration, which maybe has come out in your stock picking.
Yes, very much. And you will see how the various bots are playing this. Absolutely fascinating. The different strategies they're using and the different exposure they have to it. But we will get to that a little bit later, yeah?
Well, yeah, just as a segue into that. So we have this notion of trouble in paradise, perhaps, in terms of the AI story. A couple of headlines just from today. We have seen this tech winners suddenly losing. We know there's been a bit of a reversal out of the hyperscalers, particularly something like Microsoft had a very poor year to date in recent months. And this reversal has generally been into the likes of the semiconductors. But they themselves, despite having absolutely stunning earnings coming out of the likes of Samsung, still perhaps poised for another correction there, just given how much they've run up. And I do think equally this sign on the left, this chart around token expenditure, how it had doubled before pulling back. And I think we're just getting into having a little bit of meaningful data around token expenditure. I've seen some charts just today, actually, regarding how companies who spend more on tokens have shown more profitability. Of course, this causation versus just a coincidence there or a correlation is definitely in question. But clearly, we can now see a bit of a pullback in token usage and how that could be a challenge for investors. You probably use more tokens than the average, particularly given some of these bots we're speaking about. Do you see that sitting here in Europe and listening to players in the market using tokens, whether it's individuals, consumers, or enterprises, what's your sense as to where Europe sits perhaps on the spectrum of token usage and demand supply?
Yeah, very good question. I think I don't like this metric so much because it's an input metric. It's not an output metric, right? So it's what's flowing into your operations. It reminds me a little bit of the 2000 when they were counting page views or something like this, right? I mean, what's also interesting, if you look at the similar metric, the companies using AI the most also increased headcount the most. Maybe they were also companies that are running well even before AI. So correlation, causation, I don't know. In Europe, I think it's a lot of people are using it. Are they using it productively? I don't know. So we will get to that later.
Exactly. Well, this again is where the consultant framework comes in, because often any consulting framework would look at the return on investment. And I think this is the problem around AI and models, is that there is no clear return on investment, at least not a metric that we can reliably measure. So I think that is an interesting point there. And the final thing to say on equity markets, we've mentioned this reversal. We know there's that new term lag 7 instead of mag 7, that would absolutely play in with this turnaround. In terms of other assets, before we move to the main object of discussion here, gold, a little bit of a pickup we've seen, despite having had a very poor quarter at the end of the second quarter. Clearly there, whether that was a response to the new Fed policy or simply an exit out of some of the more trades that have been more retail driven and more technical, unclear at the moment. But I'd say as we now face into the second quarter, quite a bit of uncertainty around not only the World Cup outcome, but I'd say we've got a lot of political noise. I'd say as we approach now, we start to sort of see the field settle when it comes to the midterms. The geopolitical noise clearly is unwelcome, although perhaps volatility and trading will subside in the summer, as it often does. And I think with the AI discussions and these kind of demand indicators, and the shifts we've seen, whether we will have a reckoning when it comes to the actual pending IPOs. There's one final chart I wanted to show, which is around the consensus that has just come out around SpaceX stocks. And I think this is remarkable just how in line these, it looks like 9 banks or so, with share price targets ranging from 210 to 300. Overweight or buy, few with the hold, everyone in consensus saying that it's attractive. Interestingly, the space segment is worth very little in this model. It seems it's almost given option value. And there's a fantastic analysis in the Financial Times around this Morgan Stanley piece, which comes here top of the pile. Happened to have been one of the book runners of SpaceX in terms of how they have been so bullish. So any thoughts on this remarkable consensus and lack of contrarian point of view?
Yeah, I mean, there's a golden rule which says never short Musk. And I think that applies here as well. So say one part of the business doesn't go well, he comes with something else. And say Tesla cars are not selling. You say, okay, now it's robots. Right now, SpaceX is basically a telco, right? So they're selling an internet service, they're selling connectivity. But there could be a lot more. And I mean, what is very impressive is how they have to reduce the cost per ton of sending stuff into space, right? Now they're talking about AI in space, right? So that's, I would definitely not short them. But whether they reach 300, like Morgan Stanley is saying, I'm not sure. It's not something I would touch right now, but also wouldn't short it.
Fascinating. Well, I'm going to now let you drive as we move into some of the bot trading game, and I'll let you start with your disclaimers. But just in case you wanted to come from me, we should stress this is not financial advice. This is an insight into some entertainment purposes only. But I will let you take it away, Jens. I'll just hit the first slide and tell us all about your bot game.
Yeah, Ethan, thanks so much. Fantastic to be here. And of course, like get some thoughts from your audience and what they think of this and how it plays out. So what we have done here is I thought, well, maybe these bots are now far evolved enough so they can do something useful, right, in the stock market. And this was something I started late last year. So the official kickoff was 24th of October. Friday close. It's always the Friday close when we look at the stock prices and then we update the model and see how it's going. And it's running over 5 years, so the end will be on the 25th of October 2030, right? So that's again a Friday close. And the bots have one objective: maximize total shareholder return by the end date. Doesn't matter what's happening in between. Just on that date, who has got the most money? Price increase plus dividends, of course, right? So the rules, very simple. They must hold 10 positions at all times. Equity only, no cash. They are granted 1 monthly swap, so you can trade one stock for another every month. And you can also accumulate these swaps. Say, okay, I have no idea what to do in March. Keep it until April, May, whenever you want to use it. plus an annual portfolio reset, so end of October. Maybe if you get some interest about this, maybe we should check in and see what they have done end of October, how they have adjusted then their portfolio when they can do the full reset, right? So yeah, these are the rules of the game, and these are the participants. So we have ChatGPT, Gemini, Claude, and then a hybrid. So where I'm making the final call on what is being bought, but essentially a variety of AI are helping me build narratives, stress test narratives, and then see what sort of stocks should be under consideration.
And tell us about this commentary on the right, ChatGPT, who gets paid no matter who wins. What are these? Are these part of your prompts or part of the way you think these models approach?
So I asked them, describe your investment philosophy in one sentence, right? And ChatGPT is like one of the few bots that are beating the benchmarks. So he's positioned himself along the entire AI value chain. Models, semiconductor equipment, manufacturing, hyperscalers, everything you will see. So he says, well, I don't know where in the value chain the next bottleneck will be. Today it's memory, tomorrow it's lithography, you name it, right? So I get paid no matter who wins. That's ChatGPT. On the other side, he's like, you will see he's very exposed to it as well. Right? So if there's a hiccup in the AI trade, ChatGPT is the one who will feel it first and will feel it the most. So Gemini is a bit more balanced. There's also like a lot of software in there, some industrials. And the cash flow velocity, so he's got a formula where he says, okay, there's revenue growth and there's operating margin and cash flow margin. And that's where he places his bets with companies where he thinks that these metrics will rise the fastest, right? Claude, like Alphabot JB, very healthcare focused.
Oh, okay.
And on the total, I frankly, I never fully understood what he means with that. But seems like he's got an idea. He's got the interesting concept where he has anti-obesity, like the Eli Lillies of the world. And then he plays also like the secondary effects, like your skin is sagging. Now you need treatment from Galderma, from L'Oreal, these other companies. So very interesting end-to-end thinking, a bit like ChatGPT does as well, right?
Huh. It's fascinating because own the toll, not the road. I'm immediately thinking of the opposite of these halo stocks, the high asset, low obsolescence, which did come into effect during a rotation recently. And you would think it ultimately should be software stocks as well, which would be the subscription model without any hard assets. But let's see what the portfolio ended up. This could just be a catchphrase that means nothing.
Yeah.
And beware the treadmills. What does JB your Alphabot mean by that?
Yeah, beware the treadmills. It's about companies that have to do things out of competitive intensity, right? And even though they do not create that much value, it's like I'm an old telco guy, and they've always moved like from 3G to 4G to 5G, free iPhone if you make a contract with us. Even though maybe the what do you call like net present value of every one of these decisions might not have been so great. And that's a treadmill. And right now you're seeing that like a treadmill with the hyperscalers, right, where they have to upgrade their GPUs like every 3-4 years, or they will be no longer competitive in that. And we have like a very interesting graph on that, on like some saving grace they might see there after all. But well, let's go in. So we're looking at the allocation strategies, and you will see Alphabot and Claude very much focused on pharma. And you will see later on why this is interesting, an interesting sector for the bots. Totally different way they play it, though. Alphabot much more on immunology and Claude much more on anti-obesity. Also, the other two, they have some pharma, so this seems to be interesting for bots in general, but ChatGPT and Gemini are much more focused on tech, right? And if you see what are they buying in tech, you see overall the hyperscalers are not such a large part of the allocation anymore, right? It's mostly semiconductors or software, right? So there's a thinking, yeah, really all this capex, like 200 billion Amazon or whatever it is it really going to pay off? That's the question now. There is some encouraging signs, but so far we see the hyperscalers are not the dominant allocation there anymore.
I'm intrigued as to how your 64% in software would have performed given we had this SaaS Mageddon that we've seen earlier in the year. But maybe this wasn't in that software.
Yeah, I mean, there you can see Alphabot is having only like a very small
Yeah,
tech allocation
of course.
overall.
Yeah.
So it's 64% of 22%. So that's, oh my God, like
That's not
14,
gonna,
something like
yeah.
14%, something
Okay, fair
overall.
enough. So not going to be the dominant. So
Yeah.
tell us why pharma then, because I will say that there was a slide last week about rotation into healthcare from some tech, and that ultimately there is also an argument suggesting that healthcare broadly has a lot to gain from AI that maybe has not even been realized yet.
Yeah, absolutely. But that's something I found in the discussion with the bots already last October. So there's two things about pharma that's just very appealing to them. One is valuation shortcuts, where they think they can value these companies rather well, even though they may not be like the biggest experts on medication or on whatever. And then narrative strength. Pharma has a lot going for it. It has very strong moats. And it is an AI beneficiary on one hand, drug discovery, drug distribution, and so on. But it's also very resilient versus an AI hype scare. So if something happens and people are getting the jitters about AI, a lot of the money flows into pharma. And that is very interesting there.
Very, very interesting.
Now the market has woken up to it. So I'm not sure if they would make such big pharma allocations if you look at the October reset.
Right.
The top 3 global pharmas in the world are now at all-time high, or very close to it. Eli Lilly, Johnson & Johnson, and AbbVie. So the market has woken up to this, and we have to see how it goes further.
Well, speaking of hype cycles, how much is each of these 3 dependent on single drugs, or do they have well-diversified portfolios now?
The big 3 are very well diversified. I mean, you could see like a bit of a concentration in Eli Lilly. Tirzepatide, biggest drug in the world, $36 billion per year, perhaps this year more than 50 billion. So there is a bit of a concentration there. So there you have to watch out a little bit more on the pricing side rather than the volume side. One of the reasons why Alphabot avoided the anti-obesity play, like here this tirzepatide and then these drugs, for every 2 patients they acquire, they lose 1 during the year. So like half of the people who started, they stop it within a year.
Oh,
And that, according to Alphabot's definition, is a treadmill. So we have to, it's almost like in mobile prepaid, where you start like with 100 customers on 1st of January, 50 of them are still left at the end of the year, more or less. But there's so many of them out there, and the prices are still good enough. So for like tirzepatide to become the biggest drug in the world, and that's what you will also see in the Eli Lilly allocations that some of the bots have made there.
2 things to ask on pharma. One is regarding AI's ability to boost the pipeline because of this shortened time frame for drug testing, et cetera, at least for drug discovery, maybe not testing. And then on the regulatory side, there even seems a bipartisan desire in the US to get drug pricing down, and some policy change regarding Trump RX, et cetera, and Mark Cuban getting in on that action. I said bipartisan. Does any of that affect these valuations?
Overall, yes. I mean, if you look at the big 3, there is no way that they would not be affected by this, right? So the smaller specialty stuff, rare diseases, like where Alphabot's going more, this is, I think, is like a bit more defensible because they are rare diseases by definition, right? Cost a lot.
Yeah.
So drug discovery, yes. So far, no AI discovered drug has been a blockbuster, but they take 5 years to go through the pipeline.
Right.
So it's ask me again 2030, then we might see some. And ironically, and this is also like something we discovered in discussion with the bots, if drug discovery becomes a lot better and more high quality drugs go into the pipeline, there is a beautiful second order effect. And this is the running clinical trials, marketing, doctors, payers, all that becomes a lot more valuable, right? And that's a choke point that the big pharmas have, like Eli Lilly, Johnson & Johnson, AbbVie, and these guys. So their downstream assets become more valuable. And that's partly something the market has woken up to now. Good.
Okay, so the next, why semiconductors? Clearly, early adopters of this wave, and I'm sure those we saw one. I think it was Claude that was 100% in semiconductors. Yes, so that must have done well.
Yeah, as far as his tech allocation
Yes,
goes,
yeah.
so all the bots they love semiconductors, and you will see ChatGPT has the entire chain from ASML to TSMC to Nvidia and Broadcom. So something fascinating has been happening there. So this curve shows for how much can you rent a H100 GPU from Nvidia, right? Here, this is via Silicon Data. They collected this. And in the second half of 2025, you saw pretty much what you would expect. The curve is slowing down because the H100 is a very old product, right? So now if Blackwell, you will soon have Vera Rubin. So very old product. So slowly you see the value trickle down there. However, then it has skyrocketed. And that shows us something. There is a lot of capacity constraints. So capacity, even for these old GPUs, is very constrained. That's what you see in these prices. And it's a little bit the opposite what you showed with the tokens. I mean, like a fewer tokens, you would expect the prices to fall. This is one thing, something I would watch. We can see like the overall demand for compute. How is it evolving? This one, so far, very good news, both for the hyperscalers and for the semiconductors, because this curve is going up even for the older products. That doesn't point to these products getting obsolete very quickly. They might have a few more years in them. Right.
And then, but they don't catch everything. You said they missed the HBM craze.
Yeah, of course. I mean, the memory is now like the dominant cost factor. And so these memory stocks, they've absolutely skyrocketed. Now they have come down a bit. The bots have never been that enthusiastic. I mean, they were saying, yeah, this is like a capacity constraint, yes, but this can be resolved. It's easier to make a HBM than to make a GPU. So they think capacity will be coming in, and then this whole thing will maybe tumble down very quickly as well. Memory prices. Yeah.
So who's winning so far? Looks like we maybe hats off to Alphabot.
Yeah, so he's been doing remarkably well. So we have, I mean, I checked yesterday, is now even closer to 60% if you look at the annualized return. So we started in October, so it's now like 3/4 of a year is now over. So if you analyze, it's a bit bigger than the absolute return that you have right now. And you see, like here, the 1, 2, 3, 4, these are the benchmarks with their annualized returns as well. So we're looking at those. And ChatGPT and Alphabot are beating them clearly. And in Alphabot's case, it's probably choosing so much pharma stocks is about half of that overperformance. And then picking the right ones is the other half. Right.
Fascinating. And I suppose what I'm obviously very fantastic returns from Alphabot. What would you say if you were to give attribution there? What would, I suppose the other observation before I ask you that question is just how ChatGPT has outperformed every index. And I will say that my world is where active managers are struggling to outperform, particularly now. Maybe because they were not going all in on some of the tech, for example, and clearly ChatGPT. If you're all in a sector, it's going to be understandable. What would you say is, given Alphabot is not all in on the tech sector, what would you say is is been the key attribution there?
Yeah, I mean, first of all, the pharma benchmarks, they have performed very well. So like a heavy pharma allocation helps. And then the second part is maybe in contrast to Claude, because Claude is also like very heavy on pharma and is like a much smaller return. Claude invested very much into anti-obesity, which was always known to the pharma managers, even like the more general managers in terms of investment, was always known to be a winner, right? So immunology, as we see Alphabot JB, that has not been a very well-known story, and that has played out very well.
And I suppose we speak a lot about recursive learning. Clearly, back in October, the models were probably not as good as they are today. If I were to look at this today as an investor, I'd say, well, I will maybe be cautious about turning my portfolio over to a model to pick stocks because they haven't proven that they can outperform a benchmark. I may as well just be in a cheap beta solution. But have you noticed them getting better or performance being, improving over time, or has it been pretty stable?
Yeah, there's some fascinating swings here. I mean, at the beginning, and you know that I'm posting this every month into the
Hmm.
INSEAD chat group. At the beginning, Alphabot was not doing so well.
Mm.
Like the first 3 or 4 months, terrible, right? Claude was negative until very recently. And then the overall pharma tide has lifted his boat as well.
Okay, interesting, fascinating. Um, so this is a couple of names here, sample
Yeah.
portfolios, yeah.
Yeah, if we look at the allocations, we look at the right-hand side, ChatGPT, that's 8 out of the 10 top market cap companies in the world. So like a very consensus style portfolio.
Right.
If I look into my Fidelity pension funds, I see these names,
Yeah,
right?
yeah.
So what he has done is like gone in very, very big with the big winner. So Eli Lilly, a fantastic story, like one of the third best investment in the entire game. He's got a massive allocation there. He's got the entire semiconductor value chain there. ASML almost doubled. So it's a really big concentration in the winners. And the rest, yeah, the rest has also not been too bad. Vertex has performed very well very recently. Yeah, and if you look at Alphabot, very good at picking immunology names that have been acquired. Apogee acquired by AbbVie. He will probably swap it out in one of the next sessions. Exam, that's neurology approval for Alzheimer's. Massive expansion of their addressable market. And then Argens is like one of the top European immunology plays with also like massive prices they charge for their drugs there. Yeah, Autodesk, that's a more recent investment. So there was the thought as they move from just designing also into maintenance, they can dramatically lengthen their customer life cycle.
And Broadcom, interestingly, a similar size in both there.
Yeah, both 8% Broadcom. So that was I heard something like hyperscalers buy Broadcom because they want to, and they buy Nvidia because they have to,
Huh? Yes,
which is about like 3 times as expensive as Broadcom for the same compute capacity. But yeah, well, let's see. It has been suffering a bit lately, but we'll see how it plays out. I didn't label the smaller ones, but they can tell you on request. And yeah, so the best investments, let's say what has done well since the start of the game, like the more long-term bets. Apogee, of course, ASML and Lilly,
Yeah.
the top three. And then what Alphabot also does is like trades where he keeps something like here only for 3 months, in this case, AST Space Mobile. Because it was always clear that the SpaceX would cause a massive hype into space stocks. And he knew he had to sell it before SpaceX actually got public. So they went public in June. It was sold here at the end of May. Very nice 43% gain within 3 months. So IR of like more than 300%. And now it trades around 80, right? So this was one of the best trades of like a more short-term opportunity that you see there.
Well, absolutely fascinating. And then what's next, I suppose, is a reset coming in October. That'll be 1 year only of time to measure.
Yeah, and this is, I think they really, we will see how well they really perform in a crisis.
Right.
So far, everything's been going up, like pharma's been going up, tech's been going up. So everything's been going up, and it's very, very easy to perform well. So we see how that continues. So we'll add DeepSeek as a participant. We will also benchmark against human fund managers. As far as they publish their results, we can only go by what they say they have achieved. Then, yeah, specialized portfolios, since like out of the 27 companies that the bots have picked, only 3 have female CEOs. So we said, look, let's do a portfolio with female CEOs only. And we did this by consensus votes by the bots, and we will start measuring in October how they will be doing, right? Plus regional portfolios. So we have Middle Eastern, we have European, US, and whatever you like.
This is all coming in October. So what's your sense as to what these bots are using? You said like the discussion, they've rebalanced, they look at this, they come up with consensus. Are they deriving it from I suppose the technical data they have, the trading data, the filings, where and market insights. Do you get a sense that of the robustness of the sources?
Yeah, so I think they are not so deeply into valuation, right? So most of the valuation work I'm doing, I'm not letting the bots do. I just do it offline, right? They are very good in narratives and seeing like, okay, which narrative is evolving, which one is fading, which one is gaining traction. Tend to lend a little bit more into consensus style portfolios, but with some very interesting divergences as well, like the industrial stocks that Gemini has picked, or like the more like I would almost call them like dermatology sort of stocks that Claude has picked. So some very interesting variances. I think very narratively driven rather than quantitatively driven.
How interesting, which is, of course, how most equity market theses take hold is through narratives, and they are language models after all. So if they can analyze the language, it would be key. Well, thank you so much. Thank you so much, Jens. That was absolutely fascinating. We'll stress again, not investment advice. None of these are investment recommendations. This is purely lifting the veil on an AI bot game that you have set up that I think is truly insightful in terms of our ability to parse those narratives that are emerging, but also the ones that are working and the ones that are perhaps sustainable and the ones that are maybe flash in the pan and their own hype cycle. I take it if anyone listening to this wants to reach out to you, they can find you on LinkedIn, and they can also check in on your monthly updates. So thank you so much for coming here, for sharing your insights here, for hosting me in Barcelona, and thank you for listening to the Markets Happy Hour podcast.
Great pleasure. Thank you.